outside. But let's find out what the internals of the market are looking like. Dilip Bhat of Prabhudas Lilladher also joins into our discussion. Dilip, hi, good morning. What did you notice? What took place in the markets yesterday? Was it a lot of FIIs liquidating their portfolio holdings, or was it just a retail panic where we saw a lot of long unwinding and selling from the retail community?
I think the day before yesterday, after the RBI announcement, I think the sentiments really got weak. And probably yesterday we had all kind of rumors, right or wrong, who knows, but they all compounded the matters in a very bad way. You know, the default news that some real estate fund is winding up its operations, the continued FII selling, which is really rocking the market, some change in the accounting system. I think in such a situation, obviously somebody was trying to take advantage of this bearish moment and probably was really compounding the whole matter. So I think all those factors really played out. And of course, the fact that everybody knows that the Q1 numbers are going to be weak. And even if you were to read the statement of Mr. Rajan, it really looks like that overall things are not in such a good shape as the GDP numbers suggest, as that is what he said. So I think that's what will make the markets feel very tentative and apprehensive, at least for some time to come.
Okay. Dilip, good morning. Thanks for joining in. But when you say tentative, it is one thing. Yesterday and day before, what we have seen are vicious falls. I mean, 40-50% in some stocks, and even the ones you mentioned, JP Associates, Lanco, GMR, GVK, over the 2 days, we have seen 20% falls in some of them 40%. Will this vicious nature of the fall continue, probably because of margin calls or other technical reasons?
In my opinion, I think this vicious fall has really turned into a kind of a vicious cycle at the moment, because the margin trigger also has really happened. And in my opinion, I think that has been played out. So possibly it will play out for one or two more days, yes, but may not be with the same intensity. So as a result, there could be some bounce back, possibly in the offing. But I think it will continue to be weak. The sentiments will continue to be weak. It will still be a sell on the rise market, at least for some more time to come, maybe even for a couple of days more.
Are you also noticing a lack of buying in the market, Dilip, by both FIIs and the DII community, just because there are no positive triggers now? And would you advise retail investors to postpone buying?
Sure. To take your last question first, I think the way the markets are perched at the moment around 8,000 to 8,200 levels, I think they are not cheap. So one should not be in a hurry to buy. One should still wait for some more time for some clarity to emerge. And of course, as what I also said, that the FII selling continuously unabated over the last 1.5 months is really adding a lot of to the downside. It doesn't matter that the mutual funds are getting money at the moment. The fear right now at the minds of everybody is that will the inflow of the mutual funds also taper off? That is the question which is also bothering. So I think on a net-net basis, it's a kind of a scenario where the fear factor has overtaken. So that probably will still play out for some more time to come.
Okay, Dilip, we'll bid goodbye to you on that note. Thank you very much for joining us.
Always a pleasure.
Well, that's a warning that the vicious fall is probably becoming a vicious cycle, and so we could see that's actually the market is going to be focused entirely on that vulnerable set which saw such a huge fall yesterday.